Well, it looks like we're coming in with a little bit lighter PPI, up 0.2% on final demand month over month, and core is flat on the month, which is down from a 0.3 gain the month before. Take out food and energy on a year-over-year basis, and you are up 6.7%. That's a big drop from 7.2%, and the headline is at 8, down from 8.5. So significantly good news on the PPI, which trails CPI. They're not directly comparable. There are middlemen in the middle, but that is particularly good news. We also have good news from the Empire manufacturing numbers. It's kind of the first one out of the Fed regionals, and they are up 14 points to 4.5. New orders down a little. Inventory's up a lot, but employment is up. We're still seeing strong labor markets. Prices paid, little change, 50.5. Prices received, 27.2, is up 4 points. So not as good an economic, shall we say, inflation story on the Empire manufacturing, but the PPI comes in echoing what we saw the CPI.
Another green light to buy equities, for now at least. Let's see if this move sticks. On the S&P 500, futures up by 1.7%. So just off session highs coming off the back of this number. Yields lower. Much, much lower. Starting at the belly of the curve, the 5-year down 11 basis points, the 10-year down 9. Your 10-year yield right now just south of 377. On a 2-year, we're down 6 basis points to about 433. So yields are down, the dollar's weaker, and equities are up on this downside surprise on PPI. Mike, you and I talked about a Fed speak when it started with Patrick Harker last week of the Philadelphia Fed. He said inflation was up like a rocket, and you said it was down like a feather. How fast can this fall?
It can fall like a rocket. Maybe one of Elon Musk's rockets that just,
sort of lands itself nicely. Is that the ultimate soft landing?
This is a very unusual inflation cycle. It went up very quickly because of a whole confluence of forces. And so it could come down much more quickly. I think what you'll get is a lot of the stuff that was cyclical goes out of it fairly quickly. And then we start to see it slow down as we get some secular kinds of inflation in there. Good question to ask, not that you ever have any guests on TV to talk to, but is what do people think is going to happen after this? Do we go back to the new normal of low inflation, low interest
What's the
rates,
destination?
low growth, or do we stick with a higher level of inflation, which means higher interest rates, and how does that affect everything?
We'll definitely keep asking that. Looking just at this data, one thing that people were expecting was that services side inflation would continue to come in hotter, even if you did see some sort of mitigation in the inflationary impulse on the goods side. Are we seeing that in the details? No,
services, final demand for services up 0.4 after a 0.3 gain in August, but it's not. It's not the end of the world here. We're still seeing very small gains. Actually, I had that wrong. Final demand for services down 0.1. First decline since November 2020. So
wow.
I was wrong, but I was wrong. When I'm wrong, it's good news for the overall economy. Margins for final demand trade services fell 0.5%, which is basically wholesaler and retailer margins. And so their ability to maintain their margins going down, that brings down inflation overall. But you can think about that in terms of what it means for earnings, too.